Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm traveling to the San Juan province of Argentina, where I'll be looking for copper. Joining me on the barbecue today is John Black, CEO of Aldebaran Resources. But as always, no interview before I've warned you that Resource Talks has received compensation for the production of this video from the company that is being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means that you can never rely on any of the content, and you should treat this as entertainment and not as research. The fact that this company is being interviewed does not mean they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone, but simply to ask some questions. If you find that I have failed in asking a question that you would have liked to hear the answer to, which will happen as I am not an experienced interviewee, please let me know and I will ask it in a future interview. Furthermore, please only watch this if you know what you're doing. This program is intended only for experienced junior mining speculators, with speculators being the emphasis here. This is a speculative venture, pre-revenue companies that should only be approached by experienced speculators because mineral exploration, development, and mining is a very tough business. Losing money is the norm and should be the expectation, as this is a very complex sector and the performance of individual companies typically depends on many different moving particles, including geopolitics, macroeconomics, commodity prices, and many more, including company-specific moving particles that are not always as easy to understand. Moreover, these companies are, again, typically in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. As a general rule of thumb, you'll be better off understanding that most company communications online, albeit this interview or their website and their presentation and their social media accounts, and everything that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of this business, many out there do. And you should be aware of that inherent bias. That bias won't always be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in one way or another, because there will always be a bias, again, albeit disclosed or not. The fact that I have no idea what I'm doing should already be clear to you at this point. I don't have a long enough track record of consistent investment profits in this sector, so I should, under no circumstances, be considered an authority on anything. Although this might sound amusing to you, it's definitely not amusing to me, and it is definitely not intended as a joke. I'm pointing out a fact and warning you not to rely on anything that I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The guest, who is here likely as part of their marketing campaign, does not possess any superior knowledge, and they cannot know about what's going to go up, what's going to go down, or what's going to go in circles. And none of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the company. So yes, this show is called the CEO Barbecue, and I might end up asking a few tough questions, but don't rely on this being all of the tough questions. Again, these are complicated startups with many moving particles, and I cannot guarantee the quality of anything presented in this video. All of this is to say that you shouldn't blindly trust me or anybody on the internet for that matter, and you should always do your own research. Charlie Munger has a great quote that is very fitting to speculating in junior mining, and that goes as follows: if you don't understand it, don't do it. I understand this is a long disclaimer, but it is important because no guarantees can be made about future events, and past performance is not a guarantee of future results. What you will find a lot of in here are forward-looking statements. You have to pause the screen right now and read the warning that you see in order to better understand what those are, because your capital might be at risk. This is a conversation that is general and impersonal in nature, containing hopes for future events that may or may not take place, again, depending on many different factors. Before continuing on, please talk to a professional licensed investment advisor with a good long-term track record. as well as, again, do more research before taking any decisions by visiting setterplus.ca, which is where you'll find the company's official filings. You don't do research on Twitter, you don't do research on YouTube, you do research on setterplus.ca. If you don't do that, you're highly likely to lose your money. If you didn't have enough time to read the disclaimers showing on the screen as I was talking, or if you didn't understand what I was saying, you should not be consuming this content because you are putting your capital at risk. With all that said, I can actually kick off this interview with John Black, CEO of Aldebaran Resources. This company is listed as ALDE, so that's ALDE on the TSX Ventures Exchange, where an average of about 85,000 shares trade daily. 52-week range here is pretty wide, with a high of $2.35 and a 52-week low of 65 cents. With a market cap of about 310 million Canadian dollars and about 170 million shares outstanding, today this is a $1.82 stock. There are 11.8 million options and warrants combined, which leaves us with about 182 million fully diluted shares, meaning an increase of about 7% in shares outstanding can be expected if those options and warrants get exercised, which would then also result in a bit less than 7% ownership dilution if, and that's always a big if, but if those options and warrants get exercised. Of course, worth noting here again that this is a pre-revenue company, so raising capital and increasing that number of shares outstanding is something that could still be in the cards, even though Aldebaran specifically is financed through the PFS, through an option agreement, really, which is something we'll talk about here in a minute. The actual public float of those shares isn't all that large, though, with 44% of the shares being in the hands of Route 1. Almost 15% are held by South 32, and another almost 15% are held by Sibanye-Stillwater. And insiders here own just a little over 5%, leaving about a fifth, or 21.5% to be specific, in the hands of retail and other. The last officially filed interim financial statement is from September 30, and it shows me $3.6 million in current assets, $2 million of which at the time was recorded as cash and cash equivalents, with about $1.5 million worth of marketable securities. But it is worth noting that, as I alluded to earlier, after the effective date on this financial statement, Aldebaran signed a JV option agreement with a Rio Tinto venture by the name of Nuton, which already resulted in two payments, one that was $10 million and another one that was $20 million, with a $30 million payment expected upon the delivery of a PEA, which is expected to be completed in Q2 of 2025. And then, while on the topic, might as well tell you, there is a rather chunky $190 million payment expected upon the delivery of a pre-feasibility study, which is expected in the second half of 2026, effectively giving this Rio Tinto venture 20% ownership of the asset. Back to the balance sheet from September 30, though, there are $2.2 million worth of account payables and accrued liabilities, and the non-current liabilities are made up mostly by a $1.5 million decommissioning liability. The 3 months that ended on September 30 this year had $514,000 in expenses recorded, which is a decrease from the $775,000 expense recorded for the same period last year. That is mostly due to a drop in investor relations spending as well as the share-based compensation. Subtracting that share-based compensation from the recorded expenses and dividing it by 3 leaves us with an average monthly administrative spend for Aldebaran of about $145,000. The biggest chunk of that spend was office and administration, which accounted for about 30% of the cost, and consulting combined with management fees is the second largest chunk, sitting at about 25%, while marketing and investor relations made up about 14% of that spend. Exploration and evaluation expenses here get capitalized, so they can be found under Note 4 in the financial statements, where I see that that same 3-month period resulted in about a $1.5 million cost, 65% of which went toward field operations, 20% toward consulting, and 7% toward mapping, with various smaller expenses like travel, geology, and field administrative costs making up the rest of the spend. In terms of ratios, I normally provide 2 of them here, the first one being the drilling to marketing, but Aldebaran did not drill in the last reported 3 months, which is now changing, by the way, but I'll just give you the overall exploration to administration ratio, which sat at about 3.5, meaning about 78% of the money that the company spent went toward exploration and evaluation of the assets, and thus 22% went toward administration, again, excluding share-based compensation though. Brief reminder, as always, I'm not infallible, so I might be making mistakes in my reading or understanding of these numbers. So please head over to Setter Plus yourself to make sure you're getting the full picture. For Aldebaran, that full picture is fully focused on Argentina, where they are earning in 80% of the Altar copper deposit, which is one of the largest copper deposits held by a junior today, as we'll discuss later on. And it's located in southwestern Argentina, right on the border with Chile. And this is also the project that's attracted Rio Tinto's interest, which is, again, hopefully something we'll cover more in depth in this conversation. But first things first, John, thank you for being here. I really appreciate your time.
Great. Thank you, Antonio. Be looking forward to a good conversation here.
Well, I'm looking forward to it as well. And I want to talk to you about you. And this is, as you know, since we've done interviews before, this is typically where I'd ask you who you are and why I'd want to trust you with my money. But we've done that in the past a couple of times. So instead, I want to talk to you about your incentives with Aldebaran specifically, because insider ownership is on the lower end. Well, depending on how you classify it, because it is a high market cap, but it's still just about 5%. How much of that is you personally, and what's your average cost per share?
Average cost per share is a little bit hard to calculate on this because some of those shares have come from, as you recall, this is our third company. So our original company was called Antares Minerals. When we successfully sold that, we spun that out into Regulus Resources. And so a position myself and other insiders had already established carried over to Regulus, and then we spun Aldebaran out of Regulus to capture the opportunity for Altar. So some of those, I haven't gone back and calculated those, but I think a better way to take a look at it is that every major financing that we've completed for both Regulus and Aldebaran, ourselves as insiders have participated purchasing shares on those financings. So we're heavily vested into it ourselves, particularly when you take a look at we're running two companies in parallel. Our Regulus company working on another exciting copper project in northern Peru, as well as Aldebaran working on the Altar project. So between the two of those, I have a substantial amount of my own personal wealth tied up into both of those companies. These are very important to me. But I think another thing to point out on this is it's not obviously as investors in companies, whether it's as insiders and management in a company or whether if we're investing personally in companies like this, particularly for those of us that are working inside the company, it's not simply just the financial return on this. It's very important to me on two fronts. One, my responsibility to provide a good opportunity for investors that are coming into our stories to get a good return on their investment. And so I feel that I carry the weight of all the investors that are coming in with a responsibility to make sure they do well on that. And also there's a professional responsibility in this or a professional interest in this. It's very important for those of us that explore for copper deposits like this to do our work well, both in terms of technically doing it well, in terms of excellent geology, excellent exploration to discover new deposits, but that we're also doing it well in the sense that we're working well with the communities in the areas we're working in. We're providing an opportunity for all stakeholders, not simply those that are directly invested in the company, but those that will benefit from any discovery that we make going forward. And so that's more of kind of a professional legacy that I think, particularly myself and Kevin Heather as the real principal geologists that have been involved in all of our companies going forward. We feel this is really an opportunity for us to show what we can do and that we do it well. So it's a professional responsibility that we have on this and professional opportunity to show how well we work. So it carries much beyond just simply doing well financially from the hard work that we put into this.
And that's exactly where I was going with this, trying to figure out how significant that investment is to you personally. But you bring up a good point with where you're running essentially Regulus and Aldebaran at the same time, and they're both rather large companies, large responsibilities. They're close to the same market caps, actually, at this point. Well, at least for our tiny space, I consider that large. But what gets most of your time and attention, or how do you divide it between the two companies?
It depends what's going on with each company as we move forward. And it depends individually within our management team. When the opportunity came up to acquire the Altar project, we were happily working on the Antiquary project that we have with Regulus and moving that forward on the same pathway, the same strategy we have had in all of our companies. when we identified the opportunity to enter into an agreement to acquire an 80% interest in Altar. And one of our principal backers is a fund called Route One out of San Francisco. They backed us for our initial company in Antares. They did well on that. They've backed us on Regulus. And just like ourselves, they strongly believe that these opportunities, these large copper deposits in South America, are increasingly difficult to find. And they had always indicated to us that if we saw another opportunity that we could put our hands on, to please raise our hand. They would help us acquire that project and move forward. Don't simply wait and do one at a time. If we spot one of these rare opportunities, to capture it. So they provided significant financing for us to initiate Aldebaran and encouraged us to get both. And we did have the option to capture the Altar project within Regulus. However, in 2018, when this opportunity came up, some of our shareholders that were betting on Regulus and our opportunity in Peru weren't comfortable with investing in Argentina at that time. And so we felt it was best to separate into two separate companies to move forward. So that was a strategic decision made just to allow investors to bet on one or the other or both if they want to moving forward. But it did bring the significant challenge of it's great to have two great opportunities like this, but how would we manage that with our management team? That's a lot of work just on one of these, which I think is the direction of your question here. And so the way we address that is by strengthening our bench, by adding additional people to our team to move forward, to allow us to go forward. We're very fortunate that in both countries, in Argentina and Peru, we have very strong local teams, good, strong local management teams that operate very well on the ground and people that have been with us before. Argentina wasn't a new venture for us. Our original company, Antares, started in Argentina and then pivoted to Peru. So we've had a team for over 20 years on the ground that have been working with us, that know us well. We're very comfortable with how they work. They've come along with the same philosophy that we've had throughout all the operations. And so we were fortunate in that. But at the senior management level, what we did is we added additional team members. Adam Greening came on as Senior VP for Corporate Development for us. Very strong addition to it. Adam's the driver behind many of the sort of innovative deals that we've done to acquire financing to move forward on both companies. And that helps me tremendously to have him in position to be working on strategy and how we move forward and interacting with the major companies that show interest in both of our projects. So that was a very significant addition for us. Stan Foy came on as a vice president for project development. Stan's a mining engineer by background, so we're adding engineering capability as we move these projects along a little more deeply than we normally do. Ben Charrington, who's listening in on this call as well with us right now, came on as to more professionally manage our investor relations. In the past, particularly with our first company with Antares, I think the core group of ourselves is myself, Kevin Heather is our Chief Geological Officer, Mark Wayne is our CFO, Meg Cameron Jones is our corporate secretary. We kind of did everything. I mean, we practically were sweeping the floors in a very small team, and it was successful, but that's not sustainable over a long period of time, and particularly when you get into multiple opportunities. So we effectively almost doubled the size of our management team, more appropriately scaled it for the opportunities we have, and we have the ability to move our management team back and forth between the two projects as is necessary. So right now, with all the heavy technical work that's going on in the Aldebaran story, for example, Kevin Heather, our Chief Geological Officer, probably spends much more of his time on the Argentina story than he does on the Peru story. Myself, my time's split more evenly and perhaps even at times weighted a little bit more towards Regulus because there's some more strategic work that we're doing that involves a lot of direct negotiation with stakeholders in the area. And that depends month to month on what's going on and how we're going. But I feel comfortable how we're managing it back and forth between the two companies. You see a number of other large groups, the Lundin family, who's operated extensively in Argentina, often will have multiple companies going at the same time. And you just get good people and you get people that are flexible to move back and forth between projects. And I feel very comfortable with how it's working right now.
Sounds like you get on average about 4 to 5 hours of sleep a night, I'd say.
It's less than 5, yeah. So
That's intense. Hey, did any of those people who didn't want to follow you into Argentina ever call you up to apologize?
I don't know if it's that direct, but we've had interesting conversations.
Mm.
I've probably gotten more recently with the way things have taken off in Argentina. It's more like, boy, I wish I hadn't dumped those shares, and
Mm.
now I'll get back into it type questions. So, but most people are happy. I mean, it was for our original Regulus shareholders, the spin out of the Aldebaran opportunity. For some, it provided cash right away on it. For others, that just put it in the account and sat on it. They've been very pleasantly surprised how things have taken off now. So everybody has necessities for cash at different times. I think everyone's been pretty pleased on how it's worked out.
And that's maybe part of the answer to my next question, which is surrounding around Altar as a project. But your presentation says that Altar is the fifth largest copper project held by a junior today, and it's not you single-handedly who got it this image essentially, because it was already big when you signed the option agreement to start earning into it. But given that it's copper, which is as strategic as it gets, and that it's and was already a rather large project, which you say you knew was going to get larger at the time, which it has. It seems like Altar has changed hands a few times too, but if it's as good as you think it is, why hasn't a major already picked it up, and why isn't it already in production today?
Well, there are a lot of aspects to that, but fundamentally, when you take a look at Argentina, until recently, Argentina has been a country that has had the right rocks. It's the other half of the South American Cordillera across the border from Chile. So we have a phenomenal number of large porphyry copper deposits on the Chilean side of the border. There's no reason there wouldn't be good copper deposits on the Argentine side. And over the last, say, 20 or 30 years, it's been a country where you can do exploration work. You can come in, you can identify projects. So a lot of work has been done on projects like Altar. A lot of the initial work on Altar was done initiated in the late 1990s, and particularly in the period of 2000 to 2010. Peregrine Minerals did quite a bit of work on the project. But the investment conditions were not present in Argentina to make it attractive for major international mining companies to invest the type of money that's necessary to develop a project like this. And so it's created an unusual situation, potentially a very good situation for Argentina now. And in Argentina, there are 6 or 8 large porphyry copper deposits that have been known about for literally decades, that are not enveloped. There's currently no major copper mine in Argentina. There's been one large copper mine in Argentina throughout time, which was Bajo de Alumbrera. That's finished the end of its natural mine life. But there's an inventory of projects that are waiting to be advanced and moved along, and that they were frozen in time effectively because of the political situation in Argentina did not create a situation where it was attractive for major foreign investment. And that's changed radically with the arrival of the Malay government. And we're seeing a lot more interest come in right now. It's in the mining space. It's come in immediately into lithium, which is easier to develop and more quick to develop going forward, particularly lithium brines. But we're also seeing major investments like BHP's recent investment into Jose Maria and Filo del Sol. But we're seeing those type of investments come in and encouragement to move forward. And that's allowed ourselves and many of our peers that are on similar projects around us to move these projects more, to acquire the financing we need to have to move these projects forward and really push them forward. So the fact that they've been around a long time and kind of frozen in time is due more to the political situation than anything. Quite frankly, our project, if the Chilean border had been 30 kilometers to the east and this project was in Chile, it probably would already have been a mine for quite some time.
That last part really answers my question very well, and it is true. It's something we'll talk about in terms of communities as well once we get to it. And I also noticed something about the Glacier Act, which is something I want to
Mhm.
ask you about later on as well. But I want to talk about the project first, and then kind of work our way up to it. You currently have an ongoing field program which started, I believe, in November of last year. Now at this point,
Yep.
you've drilled some 6,000 meters, I believe. How's that been going? Any challenges, any surprises, anything of note?
No, it's good start to the season this year. We had a little heavier snowfall last year, so that delayed us. The previous year we were in October. This year we got in November. It's not particularly heavy snowfall. I think it's back to normal after 4 or 5 years of kind of drought conditions on it. So slightly later startup, but going very well right now. We anticipate we'll drill about 25,000 meters of drilling this year. As you mentioned, the first 6,000 meters is already completed. We're drilling with 5 rigs. Everything's moving along pretty smoothly in that sense. I really appreciated your analysis of our most recent financial statements as we started on this. But one thing I would point out is just the timing on this as you were taking a look at the quarter, which is the winter in South America. So it's the period when we're not drilling. So I think a more interesting analysis of that would be a full year cycle on us, because then you'll see our exploration versus admin ratio go up dramatically because you kind of chose to look at the 3 months when we don't drill. So
Yeah.
but I appreciate that style of analysis. I think it's important that shareholders realize how much of our expenditures goes directly into the ground or directly into moving the project forward.
Yeah, that's totally fair. I typically just look at the last financial statement to see what's just happened, but it is interim, and the full year always gives a better perspective. It is something we'll be covering as we'll be working together over the upcoming months. So that's something that we'll cover each time there's a new financial statement. I also typically sit down for an interview to go through it and see what you've made out of it. What is the main goal though here what's the main unanswered question, if you will, with this program, and what are the probabilities, I suppose, with for you answering it positively? And I understand part of it is toward the PEA, but I'm really mostly thinking about what's the split going to be between growing the current resource versus looking for or testing new zones.
Yep. For the past 3 seasons, what we've really focused on is resource expansion. So it's been a lot of drilling, sort of 15 to 20,000 meters of drilling each field campaign, resulting in the 60,000 meters of additional drilling we had when we did the resource update that just came out a few months ago. And that's part of our strategy. We view when we acquire a project like this, the first thing we do is try to fully understand the potential size of the project. You don't want to start a PEA until you really know what you're looking at. And you never get to the point where you've completely drilled off, but you reach a point where you have enough mineralization that it makes sense to move to a PEA. And that's the critical threshold we crossed with last season's field season of drilling. That gave us enough data to put out the new resource that came out late last year. And that new resource, as you've noted elsewhere, is a very substantial expansion. So we now have a pretty good idea of the size of the main part of the project. This year's drilling will change in focus a little bit. We'll do less resource expansion drilling, and we'll focus more on improving the confidence in the drilling. We're fortunate right now that a pretty high percentage of our drilling is in the measured and indicated category. But we want to convert some of the inferred mineralization over to indicated at least. And the importance on that is when we do a PEA on a project, which we're working on now to have out about mid this year, we're allowed to use inferred mineralization. So we can use measured, indicated, and inferred mineralization for the PEA. When we move to a pre-feasibility, we can only use measured and indicated. We're required to focus on mineralization with a higher degree of confidence. So right now, about 2/3 of our mineralization is in measured and indicated. About 1/3 still remains as inferred. So a portion of our drilling will be focused on converting that inferred to indicated, not for the PEA mid this year, but really positioning ourselves for the pre-feas, which we anticipate in about 2 years from now. We'll also be doing significantly more metallurgical drilling, and we'll start working on drilling for specific purposes. For example, what we refer to as geotechnical drilling. So this will be drilling into the potential pit walls to determine slope stability parameters and how can we design a pit. So a fair amount of our drilling now won't produce the long runs of exciting new mineralization that we've been doing consistently over the last 2 years. We'll be drilling holes that might not have any mineralization in them at all, but they're important holes because they establish what type of a pit slope can we use going forward, or where does our water come from. So it's making that shift from pure exploration and resource expansion into feasibility level activities moving forward. So even though we'll probably drill more this year than we've done in the past couple seasons, there'll probably be less of it that's reported in the traditional, this is a brand new intercept of new mineralization that's gotten the market excited about the project. What we're positioning ourselves is for the key milestone reports that'll come out later this year and next year, the PEA, which will be about mid-year this year, and then the pre-feasibility at the end of 2026. So a lot of the drilling's going into that level of work going forward.
Well, but you still have zones like Altar North that you could go to for more exploration. You have satellite deposits like QDM Gold and the Radio Porphyry. Why not go there and kind of give the market what they want, given that you do have the money for it now?
Well, that's an interesting debate, and this is a discussion I have with a lot of our geological team all the time. Of course, they'd like to find more. They'd like to test these new zones. In my position, I have to try to move the company most quickly to the answer about whether you can develop a economically viable mine. Keep in mind our resource that we just announced. Between measured and indicated, we have 2.4 billion tons of mineralization and just slightly less than 0.5% copper, with an additional 1.2 billion tons in inferred. That's enough mineralization to have a mine producing at a high rate of production for, quite frankly, 50 years or more. And so finding more mineralization right now is less of I hate it, it sounds strange, but we don't need more mineralization right now. What we need to focus on is how can we most profitably develop the mineralization we have going forward. And so when we take a look at the satellite opportunities, they're great to have there. They're blue sky opportunities, and a major miner that's evaluating whether they want to participate or perhaps even acquire us as an opportunity to move forward. They look at that as potential, but it's so far out in time that the net present value of that is not what you would think it would be, because you have to discount it for the time factor on it. So if we see a satellite project like that, what would encourage us to approach that is if for some reason we thought that was adding mineralization that was higher grade or more upfront in the mine development, it has to displace the mineralization we already have. So it's an interesting challenge, and I get it from our geos all the time. Why can't we have some more holes in this? And why can't and fundamentally the answer is we need to take the resources we have right now and focus on getting to a very attractive PEA and a very attractive pre-feasibility study, and most quickly position the project to be developed as a mine. It's great to have that there. We will get to it, or someone will get to it someday, but it's so far out in the future that it doesn't really impact the project immediately right now.
And this beautifully paints the picture of one of the main challenges in our space, right? Where you're at that part of the Lassonde curve, which they call the boring phase of the Lassonde curve, where from a business perspective, you got to do what you're doing right now. I understand that part, and I respect that. That's what you want to do. That's where you want to spend the money. But from a market perspective, from a share price perspective, on the other end, people want you to be drilling and coming out with new mineralization and excitement. So how do you balance that? How do you keep the market happy, and how do you keep them not losing interest in this project while you take the right path from a business perspective?
I partially agree with you on that, but I would contend that we're not to that boring part just yet. It's the discovery holes and the new holes are all great, but if you'll notice over the last year or two, we were not seeing the market reaction we had initially from those holes. The market kind of became numb to them. We were every month or two we were putting out long runs of mineralization and clearly drilling out a larger new deposit, but it was kind of more of the same going forward. And that's natural in a project of this size and how we move forward. The initial discovery holes get a lot of interest and draw it in, and then you're doing the systematic work of drilling it out. And the strong market uptick we had last year was in anticipation and due to the results of the resource estimate coming out. So we moved from being driven by drill results to be driven by key milestone reports, such as a resource update. And that got a lot of attraction to it. But the way we view on the Lassonde curve is that peak on that first leg of the Lassonde curve is really more at about a pre-feasibility stage. So we still have significant events coming in the next 6 to 12 months or 6 to 18 months that will be, I think, capable of making step jumps in our market cap moving forward on the project. But they'll be less driven by individual drill holes or individual drill results and more on significant milestones. One of the real key things to watch this year is we now have grades in tons in a deposit that's really big. But the next question is what's that worth? What does that look like? And skilled eyes or major companies taking a look at us have a pretty good idea of what that is. But for the average investor, it's a lot of copper. But what does that really mean? What's a fair? And it's frustrating for us because we'll feel that our market cap doesn't reflect the full potential of the project yet on this. But one of the best ways for us to do is to put out a PEA. When we put out a PEA, we're taking that large amount of mineralized material and we're converting it into economic parameters that people can understand better. So we're converting into what does it cost to build the mine and how profitable will be the mine? What's the net present value of the project moving forward? And there are a large number of investors that feel much more comfortable when they can actually see those type of numbers. And I would contend there's still several big steps that can come up in valuation for a project like this. And this is based on our experience with previous projects as well. So particularly that PEA that'll come out about mid this year. That's going to be a really important step for people to take a look at. Then you'll start talking about what's this mine capable of producing? What's it worth with hard numbers wrapped around it? And then there'll be particularly the more institutional money and is likely to come in when you have harder parameters to work on that. So it kind of changes the pace a little bit from hole to hole to major milestone report to major milestone report. And as investors, it's worth watching on these because you'll oftentimes see a run up to one of these major reports. The report comes out and perhaps it surprises on the upside and you get a little bit more out of it on that. And then in our case, what a common thing we hear right now is, "Oh, that PA's Q2 of next year," and more clearly on that, it's the end of Q2 next year. So it's about mid this year when we anticipate that that'll come out. So people will say, "Why should I invest right now?" Because there's not going to be significant new. It's going to be boring geotechnical holes or water holes or things like this. But all of that's building towards that study that's coming out. So I think you'll start to see analysts and others position themselves to evaluate what's going forward and going out. If there's a lull in price on this before that report comes out, it's a great opportunity for people to come in on a project like this. And I think that number when it comes out in mid-year this year will be I think it'll be one that'll impress people on the project going forward. And I think it'll give comfort to a whole new group of investors that prefer to see that level of information before they invest in a company. And the other thing that's very important on this is that keep in mind our strategy is to identify a project like this, capture it in any manner we can, typically in a downturn in the market or special circumstance, and then drill it out, show the full size, and de-risk it by moving it through mineral resource estimates, PEAs, and pre-feasibility level on the project. And then ideally, at about a pre-feasibility, somewhere between a PEA and a pre-feasibility in a hot market, we're trying to position this as an attractive acquisition target for a major company. And those major companies need to see those parameters around it. They're excited about what we're showing right now for potential of the project, but it's very hard to get someone to come in and acquire a project for a significant premium to your market cap until they have answers about where's your water coming from, how are you going to treat it, what's it going to cost to build. So this is fundamental work that we're doing to reach our end goal going forward.
I have some of those same questions too, by the way, for later on, specifically about water. But you mentioning the major mining companies, plural, which is interesting to me because I kind of after I saw the deal, I assumed that Rio Tinto was kind of the only potential buyer left. And I mean, maybe you can walk me through how and where you saw the value specifically in this deal with Nuton. And you've now, I mean, you're going in
Mhm.
with Nuton, and particularly in the concept of what their involvement means for the potential involvement of other majors down the road. Like, is there, what I'm asking here, making it more complicated in my own head? What I'm asking here is there room for other majors to get involved?
Yeah, very, very good question on this, and one that we plan carefully when we interact with majors on this. Um, it's an interesting, but just the when we have a project like this and companies are interested in evaluating us, typically they'll sign a confidentiality agreement, and that's what it is. It's a confidentiality agreement, so we can't say who it is or anything like that. So it's hard for us to reveal and not wise for us to reveal the details about who's taking a look at us. But occasionally that level of interest arises to the point where they were approached by a group to make an investment into us. And that allows us to more clearly show interested parties. So in our particular case, it's not simply just Rio Tinto Nuton. Keep in mind, South 32 was fundamental in our previous two financings. So they in South 32 has just short of 15% interest in the company. So they've taken a direct equity investment position in the company, um, and are closely watching what we're doing, closely enough that they felt comfortable helping us move the project forward. So they're clearly a company that has a position and interest in what we're doing right now. We're earning into the project from Sibanye-Stillwater. So it's a slightly different style of company, but our agreement is that we can earn into an 80% interest, which would leave them with a 20% direct interest in the project, as well as their current 15, slightly less than a 15% equity interest. So they're heavily vested into the project as well to move forward, either as an investment or potentially participant in development of the project, or potentially even an acquirer. So that's another group we can talk about. And then more recently, Rio Tinto approached us with interest in the project, and we worked out a slightly different agreement than Rio Tinto Nuton has been doing. On many of Rio Tinto Nuton's agreements have been similar to the South 32 investment, with an equity placement and participation that way. Here, the agreement we worked out with them is a bit different on this, in that what they have is an option to purchase 20% of the project directly. And that's staged with a series of payments. The initial payment, as you pointed out, was $10 million when we announced the agreement. When we delivered the mineral resource estimate, that triggered an additional option payment of $20 million, which has now been made. There will be a third payment that they will need to make upon completion of the PA. So when we deliver the PA mid this year, if they are encouraged by the results and want to stay in on the project, they will need to pay $30 million to go forward. And that'll position them when we deliver a pre-feasibility study, they'll have an option to pay $190 million to purchase that 20% interest in the project directly. So we've structured this. That was a particularly good situation for us because it provided the funding we need to move the project forward, and put us in a position where we don't have to suffer equity dilution to do so. As a big project like this requires on the order of $25 million a year for us to move forward at the stages we're at right now. That typically is done by issuing shares and moving the project forward, which results in a higher share count and kind of caps the upside for our current investors. So what I really like about this agreement right now is that we don't have to issue equity to move forward. And in the event that Rio Tinto decides that they don't want to continue for whatever reason, those aren't loans. We don't have to pay that back. So it's true. You could say we refer to it as non-dilutive in an equity sense. It is dilutive in the sense that if they choose to buy 20% of the project, they're buying 20%, but they're buying at a valuation 4 or 5 times what our current market cap is for, and so that's very attractive. It's effectively saying we're selling 20% of the project for what we would anticipate would be a good sale price in 2 years from now. And so it's a great way for us to finance and move the project forward. But we structure these agreements so that what you don't want to do is you don't want to be fully committed to just one company at this stage, because that removes the tension and the competition for a project. So we very much appreciate having groups like South 32 and Rio Tinto help us move the project forward. But we structure these agreements in a manner so that we're not on an exclusive relationship with them. We're working closely together. They're in a very good position to know a lot about a project. They're in a very good position to approach us someday about perhaps acquiring all of our interest in it. But we keep the doors open for other parties to come in as well. And it's tricky. It's over the last this last year's been a little bit different in our space, but the previous 2 years, it was very difficult for companies like ourselves to do traditional capital raises. The markets were a bit tired, and there just wasn't the excitement in there to raise the type of capital we had, at least at fair prices for us. And many companies like ourselves reached out to majors or accepted approaches from majors to do these strategic placements. And those strategic placements are typically done at an over-market placement, so they're attractive to our current investors. They're often done without a warrant. So they're very good for our current investors to do those, as long as you don't get locked into just one potential acquirer. So that's a very important part. Every agreement we announce, there's a lot of work in the background to make sure that we have a good relationship, but not an exclusive relationship.
It almost sounds like dating multiple girls at the same time, and I don't feel like sleeping on the couch for the next 2 weeks. So let the record show I've never done that if my wife's listening. But what I'm thinking about here, why I ask you that, John, is because I'm thinking about whether it limits. You say it doesn't. I mean, it's not equity dilutive, so there's no limitation to the upside from that perspective. But could it limit the premium to what you might get at a takeout? I mean, let's say a BHP is looking at this, but Rio's already in there. Could it somehow limit the premium that you could get for Altar?
Well, I mean, that's the consideration we have to weigh when we enter into an agreement like this. But you do require the funding to move the project forward. So that's why we structured as carefully as we can. And what we do note is that the development, the size of prize that we're looking at right now, it would require a very significant investment to move forward. We're not at the stage where we have numbers by any means on this, but this is multiple billions of dollars that are required to move projects forward at the properly sized project to go forward. Increasingly, we're seeing multiple majors work together to develop projects. And that shares risk for them. It helps a little bit on the large capital requirements that come into the projects. And in some cases, more specifically to Rio Tinto Nuton, I'm not sure all of the listeners are aware of exactly what that is and what we're doing. What Rio Tinto Nuton is in a large copper deposit, porphyry copper deposit like the one we're working on, there are often two styles of mineralization. Mineralization that's closer to the surface and has been affected by weathering processes will see the original copper sulfides change to copper oxides or secondary copper sulfides. It's what we refer to as secondary mineralization. When that happens to the upper portion of the deposit, it makes that portion of the deposit amenable to heap leach technology. So instead of having to mill the rock and make a mineral concentrate and sell that mineral concentrate to a smelter, you can put it out on leach pads and leach it with sulfuric acid solutions, plus or minus some bugs and some other additives, and produce pure copper cathode on site. So that works for the upper portions of the deposits and not on all deposits. But the bulk of the deposits, the primary copper sulfides, the unweathered material, have always required more capital intensive milling, flotation, concentration, and transporting your concentrate to a smelter somewhere. Rio Tinto and many other major copper companies for decades have been investigating manners in which they could modify that heap leach technology and see if they could make it work on the underlying primary sulfides. With the idea that if that is possible, you dramatically lower your processing costs and your capital costs to move the project forward. And so it makes projects much more profitable. And quite frankly, a lot of this work was being done to investigate how they could exploit lower grade material on it. Rio Tinto believes they've cracked the nut on this. to the point where they formed a new division of Rio Tinto called Rio Tinto Nuton. And they've collected a whole series of proprietary technologies there, and they're testing this via agreements with companies like ourselves to demonstrate how well it works. And they believe this will be a tool that they can use to leverage into acquiring projects or participating in projects going forward. We're very excited about it because if it works as well as we think it will work, it notably decreases the capex on a project. Um, and that makes a project much more profitable. It also has tremendous potential ESG benefits in that it uses a lot less water. It produces copper cathodes on site. It's much less energy intensive. It's great that copper is viewed as a green metal, a metal that's essential for a transition to a lower carbon future. But mining copper is carbon intensive. So anytime that you can mine it more efficiently with less energy use is very attractive. So I'm excited about this, not just as for our project, but in the industry in general to see how well this will work. So you could envision situations where another major might be interested in the project, or sometimes there are groups. For example, in our space, we often see some of the Asian smelters interested in having participation in projects to move forward, but they're not operators. So they need an operator, but they're willing to bring capital in. And that's a common thing. Traditionally, that's been to receive concentrates, but increasingly it's just to receive metal and participation in projects. So there are large investment groups that are willing to put up capital to move forward on a project. And they potentially could be quite excited if the Rio Tinto Nuton technology works well. So you could see situations where someone would be happy to partner up with Rio Tinto Nuton if they're bringing that technology into the project. Rio Tinto then has to compete with whether they allow somebody else to come in or they make it attractive enough for us to allow them to take the whole project over.
Well, it is those ifs and buts and potentially that I'm interested in as well. And that's exactly where I want to take this conversation because, and I know this will ultimately be answered in the PEA and it's very much forward looking, but as it stands today and to the best of your gut feeling, let's call it, John, could Altar stand on its own without needing Newton's sulfide leaching, both technically, but also, of course, economically, as well as what you mentioned from an ESG perspective?
Mm-hmm. We can't put I'm not allowed to talk specific. We can internally run scenarios ourselves, and so we have some ideas on this, but I have to be a little cautious on how I put forward. But we absolutely would not have embarked on this project if we didn't feel this was had the potential to stand on its own legs using conventional technology. So our approach on this is the PEA will have a kind of a dual look at the project. We'll produce a PEA that evaluates the project using conventional technology, and we'll do a PEA that or side by side on this that evaluates using Rio Tinto Nuton technology. And that's partly to show the delta between the two. And Rio Tinto is pretty interested in being able to demonstrate the potential on their technology on this moving forward. But it's also to demonstrate that the project's viable without this. We strongly believe it'll be a very attractive project without it. We just believe that if the Rio Tinto heap leach technology works as well as we think, it will make a very attractive project substantially more attractive.
When I said ESG there, when I asked you about this thing in the context of ESG, I was really thinking about, I'm not a huge fan of that acronym to begin with, but I'm really thinking about community here, community perspective, because I'm thinking about water, right? Which I believe you essentially have to compete with other industries there in the San Juan province. I believe it's agriculture. There's wineries, if I'm not mistaken, and it's generally a dry and an arid region, if you will. So what's the water situation from a community, but also from a logistical perspective there too?
Yeah. Water is one of the most sensitive issues on most mining projects worldwide, but particularly in these more desertic areas like we're at with this project. On the east side of the crest of the Andes, where we're located at, there is a little bit more water than there is on the Chilean side. On the Chilean side, you're really essentially for any major operation like this, you're looking at desalinated water using ocean water, either directly if that works, or in most cases using a desal plant to produce desalinated water fund your project. And many mines use that now, and most, if not all, major projects going forward in Chile will be doing that. Um, that's not out of the realm of possibility for us. From our project to the Pacific coast is only 100 kilometers. We're at the narrowest part of Chile. From the very top of our project on a really clear day, you can see the Pacific Ocean uh, across. Chile's that narrow at that point in time. So moving desalinated water from the ocean up to the project is a possibility, but it's a costly possibility to move forward. And you're talking about taking water across the international boundary, and there are mechanisms in place for treaties that would allow that type of thing, but it's more costly and more difficult to move forward. On the Argentine side, there are basins and free-flowing streams that have quite a bit of water. So in the immediate area of the project, there is enough water to support a project like we have. But keep in mind, just in the San Juan province alone, there are 5 or 6 major copper projects right now, all of which will require some water to move forward. And so putting all of those projects in starts to talk about using a lot of the water resources in the area. I believe there's probably enough water for all of those projects to come in, but you hit on a key point is downstream from us, there are other industries and other stakeholders that need water for their own well-being as well. And so there's a lot of competition on how we move the water forwards, on how we use water and how we develop these copper projects that could provide tremendous economic benefits for San Juan and Argentina in a way that doesn't do a lot of damage to other industries and other opportunities people have going forward. So we'll watch that very closely. That's one of the advantage to heap leach technology, to the Nuton technology on this, is that you would only use about a third as much water as you would if you process the project by conventional processing. So conventional milling, flotation, concentration, shipping your concentrate out uses substantially more water than you would if you were to use heap leach. So that's one of the reasons that we're pursuing this as well, is that it would make the project economically more viable, but it would also make the project have a lower impact on other stakeholders in the area, which is always an attractive aspect to a project.
And that's mostly the logistical aspect of it all, right? But I suppose water is part of the conversation when you're talking to the local communities as well. Talk to me about what that looks like really on the ground. Like, you go out there, you talk to them, you inform them about what are the questions they're asking. Do they have objections? What does that look like from the perspective of the locals?
It's very interesting in Argentina right now, and Argentina is kind of a special case because they've been through a lot of economic hardship over the last few decades, and they're in the midst of a major transformation right now. With Milei arriving, he's substantially changed the political and economic fabric of the country moving forward. And so right now it's one of the areas in the world that's most supportive of mining that I've certainly worked in. It's their people are very interested in new jobs and jobs that pay well and moving forward. And so there's a very strong support for mining from within the country and within the San Juan province in particular. Keep in mind, Argentina is a federation of states, so each individual province can set rules on how resources are managed or other aspects, as long as they don't conflict with federal laws on this. So you have certain provinces that are very pro-mining. You have traditionally have had some other provinces that are less supportive of mining to the point of being almost anti-mining. There's no greater contrast than San Juan, where we're located at, versus Mendoza, just to the south of us. 5 years ago, it would have been impossible to envision a major mine in Mendoza, and San Juan was supportive of mining. They had existing mines that was part of the fabric of the provincial community. Even Mendoza right now is embracing the opportunity for mining to go forward. They're seeing that potential, and they're seeing, as everyone understands better about the importance of mining and the actual impact of mining versus other industries. The more you know about it, the more comfortable you'll be about it. When you don't know anything about something, it's easy to be concerned about it and be against it. So what we've seen is some very good efforts done by industry and working in collaboration with the governments. We have what's called the Mesa de Cobre, which is the Copper Roundtable. It was organized by the federal mining ministry with all of us that are involved in copper mining or exploration or development at this stage. There's no actual mining, getting together to provide better information about what a mine would look like, what the opportunities are provided by a mine, how we mitigate impacts from a mine on this. So the more information that's put out there, the more comfortable governments are with the potential for it, and the more comfortable individual stakeholders or community members are with that. And then we take that as well as the nearest community to our project is 5 or 6 hours away by pickup truck from the project. It's a small agricultural tourist-based community. Their water is an important aspect of what they do. We have what we refer to as an information office, a community information office there. So we have an office where people can come in and learn more about what we're doing, apply for a job, offer services, express concerns, and we can address those. And so that's how you keep a pulse on the community and know what's going on. And it's probably right now, I would say the positive aspects of what we're doing are strongly outweighing the negative aspects, in that there's a lot of excitement, a lot of interest in new jobs or new opportunities. Keep in mind, there are the direct jobs we provide, and then there are the service provision opportunities to come forward. A very high percentage of our employees and our service providers not only are local from the province, they're local from that community and coming forward. And so we give a strong priority to that moving forward. And that's gained a lot of acceptance for the projects, a lot of excitement about the projects. But there are others that can't participate directly in the project or feel that the project could jeopardize. A winery, for example, could fear that, well, that's great, it's there, but if I don't have as much water to develop my opportunity with wines, then that's competing. And so we have to work and show how we can work together on this to move forward. So it's a very interesting challenge. It's one we're very actively involved in. When I started out as an economic geologist more than 40 years ago now, we were trained to look at the rocks and find mineralization. That's what we did. Over the decades, it's changed so dramatically now that a very large part of my job and my team's job is to work with the local communities to communicate well with what we're doing and show how we can do what we're proposing to do in a way that works out best for everybody on this going forward. And that's just essential these days for moving any project forward. But I'm very, very excited and very pleased about how it's working in Argentina right now. There's a lot of support for the development of mines, and there's a lot of communication about how we do it best moving forward. So there will always be situations where someone might be concerned about what we're doing, just as we could be concerned about other industries competing with us on things. And the key thing is open communication, openly working with groups to make sure that we're doing things that balance things as well as possible going forward.
You started as an economic geologist 40 years ago?
Yeah, probably more than that. Yeah, so
I didn't know they let 5-year-olds do economic geology, but that's good to know. I was also about to make a joke that who needs mining when you have wine? But actually thinking about it, you probably need mining before you can get to the wine because you need the metals. I want to talk about permitting the.
Well, and there's an interesting note there too on it is that for wineries and particularly wineries that do well on that, they need a good economy. They need people with free income, particularly if you're talking about a more value-added wine, something that costs a little bit more or something like that. And so they benefit from having a vibrant community and a community that's doing well. And so if a mine can contribute to having better jobs and better paying jobs in a more stable economy, that can benefit their business as well. And so there is kind of a symbiotic relationship. We could also go into per capita alcohol consumption by miners or something like that, but that's a whole nother story. So
That could get culturally sensitive, although you're probably right with the way you want to go. But what I do want to talk about though is permitting in general, and specifically from the perspective of the Glacier Protection Law, which apparently is
Mhm.
a law from 2010. And I want to know if that concerns you in any way, because I tried looking into it and nearly lost conscience for a moment because it's kind of complicated, but also because their definition of the periglacial areas is very broad, which seems like it might
Yes.
create uncertainty about how much of the land around these things really is protected. And so why I'm asking if the 2010 law concerns you is because I'm thinking how it might be or how it could be used against you by various environmental groups or NGOs, but also the local communities if they wanted to make some sort of a point. So, yeah, what do you think about that?
No, it's certainly something we put a lot of focus on this moving forward. Just for to provide a little more context on this, this was a resolution that was passed in 2010 that it's it's typical of um, efforts we see where a broad concept is put forward that everybody feels good about protecting glaciers or glacial related materials with a principal focus on concerns about water and the role that glaciers play in water balance in areas. And with the idea of not destroying a glacier that's a reservoir for water effectively and affects the communities. And so that's what the direct intent of that was to protect water resources that are tied into glacial features on it. Um, I think it'd be innocent to assume that there weren't other interests that thought that perhaps something like that could be used to block development of things in mountainous areas in the country on it. But when it was passed, it was very broadly written, and what wasn't in place is what they call the implementation or the regulation that goes with that. So how do you actually define some of these features? What stipulates something that needs to be protected or of concern on that? And so, and there are two levels on this. There's the provincial level, the provinces that had potential for mining expansion were concerned about came in. So they put in their own legislation. So we have glacial legislation in San Juan, and we have glacial legislation at the federal level. And both of those are a bit vague on exactly how they work. And so we're working closely as industry, we're working closely with the provincial and federal governments to arrive at a better definition, a better implementation of this, and more clarity on how it works. Specifically on our project, we have no what are referred to as white glaciers. We have no glaciers that are what most of us would think of as a glacier feature. We do have some periglacial features. So these would be features like permafrost in some areas up really high on the backside of the project, or some areas which are evidence of kind of extinct glaciers, if you will. So glaciers that were at one time a glacier, but now no longer have a core of ice in them, and they're not affecting the water balance whatsoever at all on it. So taken to an extreme, there is a risk that a portion of our project could be off limits. We'd certainly have a large project without it. It'd be better if we don't have some of those features to that extreme. But what we're working with is we're working with the provincial governments and local environmental authorities and others is to demonstrate the situation on the ground. So we do a lot of scientific investigation into where the water's coming from the project. Are any of these features affecting whatsoever at all the water balance? And they're not. And we can scientifically demonstrate that. A very similar process was taken by Glencore on the Pachon project, which is about 25 kilometers to the south of us. And they've successfully taken their information and demonstrated that the features on their project don't have an impact. So they've been removed from the inventory to go forward. And they've set a pathway for ourselves and other projects to follow on how we can clarify the situation on the project and demonstrate that we're not affecting water balance or destroying sensitive features or anything like that by development of a mine. So there's a good pathway to go forward on it. But we have to continue to work on that and demonstrate it moving forward. That's one of the questions we get from any major group taking a look at us. And so South 32 and Rio Tinto were very familiar with the situation on the ground and chose to make their investments moving forward, which I think demonstrates their confidence in that it's a manageable situation.
Well, maybe they should watch these interviews before talking to you. That make their lives easier. Uh, can 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 groups argue that even if you're not directly impacting the glaciers or the protected zones around them, essentially your own water usage or your overall environmental footprint kind of indirectly affects the whole ecosystem, if you will,
Mhm.
of and around these glaciers?
Well, there are no glaciers. Let me make that clear. There are no glaciers on our project at all. There are some feature in a vaguely written law. There are some features that perhaps could be interpreted to be paraglacial features. And so what we're doing is demonstrating that they're not of a character that impacts water. So we're not affecting glaciers. We're not affecting anything like that whatsoever at all. It's more tied into how do we get clarity on what is potentially subject to being. We don't have anything that's protected on our ground right now. We're working on the definition of what it is and classifying what we have to move forward. So it's in this case, it's not. I mean, our project and many of the other projects in San Juan and farther north, it doesn't make sense really to use a law like this to try to protect things. We see other things in various parts of the world over headwaters or different things like this where there are concepts that are used to perhaps block things. If you took this to extreme, you wouldn't be able to build highways, you wouldn't be able to build ski areas, you wouldn't be able to build a lot of other activities in the Cordillera based on this. There's a similar law in Argentina that was passed with an objective to protect wetlands, with the idea that wetlands, areas that are boggy or have water in them, are important to the water balance overall. And so a similar loosely written legislation has been put in. That's received a lot of pushback because it strongly impacts housing developments and all sorts of things throughout the country. And they realize quickly that, well, if this is applied to the extreme, it has a lot of negative impacts and restricts the development of perfectly viable industries going forward. So it's a situation with both the glacier and the wetlands laws where it's basically working with government authorities and other universities. We have experts from Switzerland and North America that are helping us on this to demonstrate really what the situation is and the impacts and the potential impacts we have on things and demonstrate what's possible. But we'll follow the best science going forward on it, but I'm quite confident it won't restrict the development of the project.
It's fascinating. These things are, and they're very niche. Like that's not something you read about every day or get to know much more. I stumbled onto it, so before people think I'm smarter than I really am, I just happened to stumble onto it and kind of follow the thread there, and it was interesting. So thank you for that overview, John. I want
You'll
to
see
kind of
this in a lot of parts of the world. There'll be some areas where there's sensitivity around a certain species of animal or things like this. And in some cases, there's a very valid reason to worry about this. In this case, I think it's not something that the development of the mine is going to have a negative impact that's envisioned on this. So I think this one is a pretty clear situation where logic will prevail on it. But we see this on almost any major development project, not just our industry, many other industries around the world. You have to work around these type of concerns. But I go back to the best thing is to have the best possible information we have on it and then lay that out for everybody to evaluate and make the best decisions going forward on it.
yeah. Yeah, that makes sense. I want to switch gears here a little bit, John, because I know you almost have to go in about 10 or so minutes here. Your updated resource grade
Mhm.
dropped with the new resource a little bit. What do you, I don't know if you're guiding anything for the PEA, or do you think that grade is going to be in the PEA what it is right now?
Little early for us to tell, and it depends on which processing technique. Because if we look at Nuton, for example, with much lower capital costs and lower operating costs, you can drop your grade. So there may be two cutoffs depending on which approach we're taking on that. So, but generally, on these projects, when you take a look at it, you have to make a decision what cutoff you're using on the project to move forward. And then when we move into a PEA, then you're floating economic shells. At a resource estimate, you're capturing as much of the mineralization as you possibly can. And then when you move to a PEA, you're showing the most profitable way to mine that. So you often take a smaller portion of the mineralization to do your upfront. You want to recover your capital quickly on the project, and that'll maximize the net present value, the value of the project going forward. And so sometimes you'll see the grade go up because of taking the better parts of the project to do the initial stage of the project going forward. But then you also get into a situation where you'll take your cutoff all the way out to a break-even cutoff too. And so sometimes you're dropping that grade because if you're moving the rock anyway, you're going to put the low grade material in with a better grade material to process it going forward. So it's a little early to say. I think a better way to approach it for listeners is this grade comparable to existing projects? So if we see large operating mines that operate on high volumes on low to moderate grades, we'll see projects like Cerro Verde in Peru, where they're processing 0.3x copper mineralization with no byproducts associated with that at all. We'll see projects like Cobre Panama that was recently built in Panama. It's had its other political challenges to it recently, but a major investment was made on a very large low-grade deposit on this. And so when you have these deposits that are 0.4, 0.5-ish type copper mineralization, you have to develop at a scale that has a lot of throughput to handle that capital cost to distribute over a lot of volume on that moving forward. So we're well in line with a number of other existing operating mines as well as recently developed mines in terms of the grade.
The processing is something that I want to get to a little bit here, but the reported cutoff grade is 1399, not 1399 NSR per ton, which was consistent with 2021. Is that the assumption that you're going to keep going forward with, and why, or where does that come from?
We use that just so people are aware. Sometimes it's simplified to just a grade cutoff, like a 0.2 copper cutoff on this. We use an NSR to calculate the resource on this. And it's partly because we have other metals that can contribute economically to the project. We have gold and silver, and they have different recovery rates than the copper does on that, or projected recovery rates on that. And we also have arsenic in portions of the deposit. And arsenic, depending on the levels and what we have, can be a deleterious element, and it can result in a deduction from the value of your mineralization. And so what we'll do is on a block by block basis, we calculate the net smelter return, the value of how much money you would make off that block of mineralization, but it has a number of different factors that are going into that. So it's a better way for us to calculate the value, and then we show what an approximate copper equivalent would be on that. But the number we're using, 1399, or about $14 per ton, that's substantially above a break even. A break even cost on a project like this would probably be closer to 5 on it, closer to say a 0.1. Big copper mines, the break even on it is often between 0.1 and 0.15% copper. But you'll see at an early stage we'll choose a higher cutoff for this to show the project size.
Yeah, but that also assumes that Alder Central, East, and United can be processed kind of uniformly, though, right? Is that the case?
It's no, you have to mine it from the top to the bottom. And so you have to work through certain types of material to get to other types of material on it going forward. But when you float a pit like this, you're basically on an individual block by block basis. You're saying, for me to extract this block, is it profitable to go forward? And you keep letting the pit grow until you reach a point where it's no longer profitable at the cutoff you choose to report at to move additional material. And that gets you to your ultimate pit boundaries.
That makes sense, actually. I think I thought about it wrong at first, because I was thinking whether there's going to be any specific operational challenges in kind of combining these zones, in one conceptual open pit, essentially.
There are 3 zones, and this is typical of most porphyry copper systems. When we will often say it's a porphyry copper deposit, but there are very few porphyry copper deposits that are just one intrusion causing the deposit. They're usually a cluster. They're a camp of several intrusions. In this case, Altar Central, Altar United, and Altar East are distinct porphyry pulses that brought in mineralization, but they're so close together that they coalesce together. So one open pit captures all three of those zones. Something like Altar North now, where we don't have enough drilling really to show what's there yet, that would be probably an additional pit if we found mineralization there. Or at QDM Radio off to about 3 or 4 kilometers to the west of us, that's another center of mineralization. So occasionally you'll see a porphyry copper deposit consisting of several pits and close to each other. Sometimes you see one large pit capturing multiple pulses in the same pit. That's the situation we're at now.
Could you option out some of these satellites essentially? Like, would that even be conceptual to you, where you think like Radio Porphyry, find someone else to
Yeah.
operate it while you're working on a PFS?
Probably not. I think that'll be someone else's choice far down the road from us on this. But usually you wouldn't justify, say, building two different plants on the same project or something like that. I'd probably do. They're separate, but they're so close together, you would consider it as all one project, I think. And I think one management team, whether it's one company or whether it's a joint venture of several companies, they'd prefer to have control of the district and be able to move forward. So I don't, in most cases, I don't think you would do that. So,
Yeah. I was thinking
there's
mostly
a
about
slight
the.
opportunity, and there's a small gold deposit at QDM. It's called the QDM gold deposit. It's gold only,
Mhm.
or gold silver only. Perhaps you could consider that being a separate operation, but it's currently it's about 600,000 ounces of gold. It's small compared to what we're looking at overall. You could possibly consider that as a separate operation, but
I was mostly thinking I understand from an operational perspective, it would make no sense for two different companies to operate or have two different processing facilities or something like that. But I was thinking mostly from the perspective of exploration, but that probably doesn't make too much sense either because of what you just said. Like a final buyer would probably prefer to have it all under one roof and have those as optionality later down the road.
yeah.
So that would make more sense.
What could happen is typically a project like this starts at one size. And then over time they consider expanding it,
Mhm.
particularly if you have a deposit where you have your highest grade on the top, and as you expand it over time, you get into lower and lower grade material. You want to keep the same production, so you have to increase the size of your production to do that. In our case, that's probably not the situation on this, but sometimes once you have an operation up and running well, you can evaluate whether an investment to expand the operation is a good investment for you to go forward. Most major mines are doing that in the porphyry space at some point in their lifetime. And so some of these additional projects, if you were to notably increase the size of your mill, then maybe you start to bring those on and incorporate into it. The one thing you want to do is make sure you make a plan that you're not putting key infrastructure on the top of known mineralization. So probably the biggest argument to do some additional drilling in those areas is to make sure that you're not accidentally sterilizing mineralization by building a mill facility on top of it.
Well, if you're lucky,
But those are
you
good
end up
problems to
with.
have. So
Exactly. If you're lucky, you end up with having no space to build a mill at all because it's all
yeah,
mineralization. But a man
yeah,
can dream, I suppose.
yeah,
I have a couple of technical follow-up questions here, but I
yeah,
know you don't have all day, and even if you did, you probably wouldn't want to spend it looking at my face. But maybe we'll book a separate interview to talk specifically about the geology and some of the other implications that it might have in
absolutely.
your
Yeah,
future. But I want to work toward wrapping it up here because, in summary, you're very excited and you think there's good times to come. And that's part of your job as a CEO too, of course. And while your share price is one of the exceptions in the junior market, where instead of it going from upper left to lower right on the chart, it's done the opposite and it's done well. One may still argue, though, that it could have done better, especially because you're still trading below the highs that the price reached right before the updated resource. So who's selling, what's happening there, and how can you turn it around specifically from a market perception perspective? I know you're kind of maybe changing up marketing a little bit. I mean, you're going to be working with me, which is part of it. So what's happening there? How do you change it?
well, we'd love to see our share price just always march up steadily and approach a fair value for the project. And I think there'd be very few CEOs in my position that wouldn't argue that our share price is low for what the value of the project should be on this. But I think overall we're pretty pleased with how we've moved, particularly over the last year, as there's been more recognition on the project, and we've benefited from Argentina suddenly becoming such an attractive investment environment moving forward. So I think after a strong run up like this, it's natural that some people might consider, maybe I'll take some money off the table. And I learned years ago that it's kind of wasted energy to try to stop people from selling shares. That everybody can have a perfectly good reason to sell some shares, particularly if they're up in a good position, they've made a fair amount of money on it. I think it's important that I make sure that they're aware that there's much more potential, but they may be deciding to build a house or have some need that they have for those funds. And so I think some of the people that are selling have just made a heck of a profit over the last year or so on the project, and it's kind of makes sense to, I think a smart thing would be just to not sell all of it, but I could see situations where people. So what we focus more on is looking for buyers. That's a more useful point for our time, is to focus on people that either want to increase their position or want to identify new opportunity to come in. People that are excited about the copper space, that recognize the looming shortage of copper coming up and the importance that copper is going to have playing in a different energy situation moving forward in the world. And so what we'll do is focus on letting people know, and these pullbacks create opportunities for people to come in on it. So it's great if it's smooth. That'd be a perfect world, but it rarely happens that way. And so the best thing we can do is provide good information, indicate to people the potential key milestones coming up, like that PEA about mid-year, which often result in a significant re-rating, just like the mineral resource we just put out resulted in a significant re-rating. Sometimes that re-rating happens in anticipation before it comes out. Sometimes it happens after it comes out. It varies each time. But we can see several clear, logical re-ratings coming up on this project and increases in value of the project. And I think we put ourselves in a position where we won't be diluting that out by putting out a lot of shares to finance how we get there. So I think there's a pretty clear investment opportunity defined here for people to enter in. And when some people decide to sell their shares, I think most are doing it happily right now. I'd like to think that creates a good opportunity for somebody else to come in and pick up some shares and be happy down the road.
Good. Well, and I hope we will get to speak about Aldebaran again before that PEA once, and then after that PEA is out, hopefully another time. But let's close it off here, John. What am I forgetting to ask you, though? What did you come here hoping to talk about that I failed to bring up?
I think you've got most of it, but one thing that just was on the tip of my tongue as you made that statement is that obviously the PEA, which will be about mid-year this year, and then particularly the pre-feasibility study late 2026, are key milestones. But it doesn't mean there won't be interesting information coming out between now and then. There will be new drill results. There'll be results that are either improving the confidence of mineralization, or in some cases, we're drilling areas to define new mineralization as well. There'll be key information coming out about how well Nuton may work on the project. There'll be key information coming out about the design of there are elements of this that we can release prior to coming out to the PEA. So there will be important steps coming out, and I think you'll see an increased amount of awareness in the project. We're conducting a mining analyst visit later the first week of February, actually, on the project. We'll have some new eyes on the project that way. So I think you'll see increased coverage from specialists in our area, providing information for people to come in on this. So it's not like you have to wait until mid-year to see results on this. There will be key information coming out. And also watch copper price on this. All of us in this space in copper are affected by copper price overall. And so when copper went up very strongly at the first quarter of 2024, so about a year ago, approximately March of last year, we saw copper go up dramatically and go to all-time highs above $5 per pound. And all of us went up in value on that. And so that's just a pure copper play on that. As copper pulled back over the last year, I think that's hurt a lot of us of just people being less bullish on copper. Just in the last few days, we've seen copper price firm up a little bit. And so if copper were to return back to those values that we saw last year, and I believe there are many reasons to believe that it will do that and perhaps even more, I think you'll see a strong increase in valuation for all copper stories like ourselves and probably more selectively the best ones of those. So right now is not a bad time to be positioning in copper space at all. So.
I'm right there hoping with you, John, and thank you so much for sitting down with me. This was John Black of Aldebaran Resources again. Thank you so much for sitting down with me, sir.
Great. Thank you, Antonio. Hope to speak with you again soon.